When it comes to investing in individual stocks, then it is really important to stay up to date with what is happening with that company and with what is happening with the market as a whole. And we've just had 5 consecutive trading days in the red, and that is the worst week we've had since fall 2023. And right now, then we have a lot of really high quality dividend paying companies trading at great values. And in today's video, then I'm going to be talking about 5 of these really high quality dividend paying companies that is trading at a discount right now. So if you have been looking for dividend stocks for your portfolio, well then you've clicked on the right video. And without wasting any more of your time, then let's get straight to the first one on my list. And the first one is gonna be Home Depot, ticker symbol HT. And this is a home improvement retailer in the US. And they have been suffering a lot lately because consumers, they are postponing their home improvement projects. And that is because of the performance of the overall economy. And that has resulted in a really low share price, sitting at $335. And that is a loss of 10.64% within the last 30 days alone. And they're right now trading at a forward price to earnings ratio of 21.83. But if we do zoom out and look at the long term, then has Home Depot given investors a return of 320% over the last 10 years. And that is a pretty good return. And the analysts, they do also agree with Home Depot being a buy at the moment. And they have rated Home Depot as a moderate buy with an average share price sitting at $385. And that is an upside of 15% within only 12 months. And that is a pretty good return. And now let's get into those juicy dividend stats. And Home Depot, they currently have a dividend yield sitting at 2.68%. And they are growing that dividend very fast. And they have a 5-year growth rate in their dividends of 14%. And they have consistently been increasing that dividend every single year for the last 14 years in a row. And now let's talk about the second company on my list. And here we have Vici Properties, ticker symbol VICI. And this is a real estate investment trust. And just like all of the REITs, then have Vici been heavily impacted by the high interest rates. That has made investing into real estate more expensive and less profitable. And that has had a negative impact on their share price. And they're now down by more than 4% during the last month. And that also brings their total loss to more than 15% during the last 12 months. But Vici is a really solid company. And whenever the economic environment becomes more favorable for REITs, then are they gonna perform very, very well. And the analysts, they do agree with that. And they have rated Vici as a strong buy at the moment. And they are forecasting more than 22% of growth during the next 12 months. And that is really good. But not only is Vici really attractive based on their current valuation, but they're also paying some great dividends. And they have a dividend yield sitting at 5.86%, and they have a 5-year growth rate in their dividends that is close to 8%. And that is also really good when considering that their dividend yield is already very close to 6%. And moving on to the third stock on my list. And here we have JP Morgan, ticker symbol JPM. And this is the largest bank in the US, and they have a massive global influence. And even though banks have been performing very well recently, then is JP Morgan actually down by 4% during the last month. And they are trading at a very nice price to earnings ratio of just 11.5. But if we do zoom out and look at the long term, then we do see that JP Morgan has been a really good investment. And they have given investors a return of more than 230% over the last 10 years. And that is a pretty good return. I do see JP Morgan as a great investment long term, as it is the world's most influential bank. And the analysts, they do agree with that. And they have rated JP Morgan as a strong buy at the moment, with an average share price sitting at $209. And that is an upside of almost 13%. But JP Morgan is also very known amongst dividend investors, as they currently have a dividend yield sitting at 2.48%, a 5-year growth rate in their dividends of 7.5%. And they have been increasing that dividend yield every single year for the last 9 years in a row. So moving on to the fourth stock on my list. And here we have Starbucks, ticker symbol SBUX. And yes, I know that I have been talking about this one a lot lately, but I simply feel like it's too good of a buy to not be talking about it. And right now, they're down by 4% during the last month alone. And that does bring their total loss up to more than 18% for the last 12 months. And that is a lot. And Starbucks is a really solid company that has been suffering a lot lately. But it seems like they are finally starting to turn things around. And the analysts, they do agree with that. And they have rated Starbucks as a moderate buy at the moment, with an upside of more than 22% within the next 12 months. And that is a very nice return. But not only could Starbucks potentially give you a very nice return, but until then are they gonna pay you some very nice dividends. And they currently have a dividend yield sitting at 2.6% and a 5-year growth rate in their dividends of almost 10%. And they have been increasing that dividend every single year for 13 years in a row. But if you do want to invest directly into one of the world's largest tech companies, for a bit more growth orientation in your portfolio and for some dividends on the side, well then you could be investing into one of Warren Buffett's all-time favorite investments, and that is Apple, ticker symbol AAPL. And this is a company that doesn't need any kind of introduction. We all know what Apple is. But Apple has had a very rough year, and they have been heavily underperforming, and they are now down by 14.3% year to date. However, if we do zoom out, then we do see that over the last 10 years, then has Apple given a return of more than 700%, and that is a very nice return. Even though Apple has underperformed recently, then you should be thinking long term when it comes to Apple. And I do see Apple as being one of the top AI leaders, and definitely being one of the top tech companies in the future. So it is definitely looking very bright for Apple in the future. And the analysts, they do agree with that. And they are forecasting more than 21% of growth for Apple within the next 12 months. And that is a very nice return. And Apple is also paying some dividends on the side. But the reason why you should be investing into Apple is not because of the dividends, but because of getting some more growth orientation in your portfolio. But they currently have a dividend yield sitting at 0.58%, a 5-year growth rate in their dividends of 5.63%, and they have consistently been increasing that dividend every single year for the last 10 years in a row. And that is basically my top 5 stocks to buy right now. I hope that you liked the picks I had in the video, and if you have been looking at other stocks that you want to buy right now, then please leave a comment in the comment section below and tell me all about it. Until then thank you for watching the video, and see you guys in the next one.